Okay, welcome back folks. In this video, I'm going to provide you with another example of a market maker sell model. Okay, now I didn't trade the New York session yesterday, right? This is from yesterday, 8th of November, 2024. Okay, I did a trade in VIP live with students for London session trade. This was my trade with students live in the London session. So you can see significant size, nice profits. That's pretty much what I traded yesterday. But I did give students some guidance that New York would provide a long setup, because basically I had ended my day, ended my week, and gave students some guidance on what to expect for the New York session. And I'm going to break down that particular setup for you in this video. So what is a market maker sell model? Well, first you have some level of consolidation, okay, which you have. And then you want to kind of see the market come back down into that consolidation, which is what we have, as I pointed out with those arrows. That is basically accumulation, okay. Then you want to see another level of accumulation, okay, which you see up the top there. And then some form of a smart money reversal, and then you want to see the market then reprice lower, coming back down to beneath that original consolidation. That's what we have there. That's our market maker sell model. Now, students, some of them in VIP traded this move up. Okay, so some students traded the left side of the curve, and that was the guidance that I had provided them. Okay, that New York should provide a buy setup. Okay, so many students took that. Some students also took the right side of the curve because that was a bit easier. Okay, I'll tell you why in a moment. So you could take either side, right? You can take both as well, because both are valid setups. And I'm going to show you how you could have taken advantage of both of those setups, trading up, okay, and trading down, and how you could have identified that. Okay, so firstly, let's look at a 15-minute chart. Okay, and let me get rid of that drawing. Let me also turn on the sessions so you can see the different sessions. Okay, so let's look at this. Let's go to, there we go. So if we look at how the day is evolving, we've been going down, down, down. Okay, so there's a lot of folks who are short. Okay, so let me now go back to a 5-minute chart, because it's going to be a lot easier to see this on a 5-minute chart. So as I've shown you on that 15-minute chart, basically we have been going down. Okay, what does that mean? That means lower lows, lower highs. Okay, this is a trend to the downside. When we get to London, we can see there's a shift in the direction. Firstly, I want you to notice this level, right? This was an important level, and I marked this out for VIP. Okay, let me show you that level on a 15-minute chart. Why was that important? Okay, so as we are coming down, we're coming down into this level, right? This down candle, where one could expect a level of support. Okay, so that is essentially the down candle preceding this entire move up. Okay, and we haven't come back down there until we get to London, right, on Friday. So that's important, and that is a level where one can expect support. Okay, so we were looking for a change in the direction at that level, from that price level. Okay, and we got that. Now, also I want to point out that the market pushed up. Why did we see resistance from this level? Well, if you look at a daily chart, okay, if you look at a daily chart where this market moved down, okay, we're coming back up into this. Okay, that there is our bearish breaker. Okay, that's a down move preceding this entire move up. Okay, that's a new high. Okay, we go through there, we come back into that level, that is our bearish breaker. So that's why when we moved up into there, and VIP traded this move up, okay, VIP traded this move up, we can expect some level of resistance, okay, and that's what we got with that move down. So that's why we had that move down yesterday. Okay, so that's just some added context, but nothing to do with our trade yesterday in New York. So now let me get back to a 5-minute chart and talk about a few things. So we have a few points of reference. We've come down, right, in London to an important support zone on the left-hand side, as I've explained on that 15-minute chart, but we're waiting to see how does price behave at that level. At the moment, we're getting lower lows, lower highs. This is the first time we start to see we are now getting swing highs broken, right? See that swing high broken? Even this swing high. This swing high is broken, not a lower low anymore, okay? Coming to this rejection block, move up, swing high broken. Okay, so we've got a breaking structure, pullback, okay? This does not make a lower low, right? Leaving these lows intact, basically coming back into this rejection block, okay? And then moving up with displacement, again, a higher high this time, right? Breaking structure. When you have a movement above a previous session, okay, that's the breaking structure. Okay, so now we're simply looking for confirmation of entries. Okay, now VIP know what to look for inside of this price area to get a sniper entry for the long, okay? But essentially, if you look at this, order flow is bullish, okay? So if you look at this move down, okay, this is 8 o'clock, right? Second hour of the New York session, okay? ICT cools and starts at 7 a.m. Okay, ICT basically says, look for where the market coming into some kind of bullish ICT signature. Okay, here, this move down at the open of New York, we swept liquidity. This down candle becomes our bullish order block. Here we go up, through there, through that down candle, we're coming back down at 8 a.m. Okay, into bullish order block. We can long, okay, and expect repricing higher. Move up, okay. These two down candles are coming to this, right? So when we've come down here, right, with strip liquidity, that's our bullish order block. We go up, okay. And as we're coming down, these two down candles are now a new bullish order block, but we can enter long as the market's coming down into this bullish order block, okay. So move down into this bullish order block, move up. These two down candles are coming down to this bullish order block. Notice we have a fair value gap there as well, right? What time is that? That's in that 8:30 a.m. candle, another key time for the New York session. Okay, these two down candles are also now forming their own. This is a bullish order block in its own. Okay, so we go up, displacement, move down. Okay, this is now 9 a.m. inside of this fair value gap. Okay, coming to this bullish order block, move up. Okay, now it's important that as you're watching this, you're watching order flow, okay, and you're also watching what's going on. So at each point, you're either locking in profit, and that's a nice move from our initial entry, right? Maybe at this candle 8 o'clock. Up to wherever you want to take this. So far, it's over 100 pips, okay? But what's important here? Let's go back, because where could this fail is what's important. What could you be targeting? Well, you could be targeting these swing highs on the left as you're moving up, okay? But what's important, if I go back to a 15-minute chart, you need to know where could this fail, right? Notice that we have a sell side imbalance, right, on a 15-minute chart. Okay, that's important because the market's been going down. Could that be a move up into, that's a premium PDRA, right? If we're coming up into a fair value gap on the left-hand side, okay, a bearish fair value gap, right? Sell side imbalance, that's a premium PDRA. So you want to be careful. You want to be looking at and having those marked on your charts, because that's where this move up that we are long from could be a nice level to take profits, especially when we have a swing high there as well. Okay, and that's a decent range, right? We don't want to be greedy from entry. That's a decent range of more than 100 pips. At least at a minimum, take the majority of your position off at that level, okay, for a runner up to Asia highs, at which point they are also equal highs. Okay, so that is how we could have traded the buy side of that curve, and knowing that 9 a.m. is key, it's a brand new hour, you definitely want to be watching that very closely, and any sign of weakness should be a trigger to close out the trade or lock in profit, or at least put stops to break even, okay, or take partials, very important. Okay, so let's go back to that 5-minute chart, because now I want to talk about how could we have traded the sell side. Now students, as I said, traded the buy side, and students traded the sell side. Some students traded both buy side and sell side. That's what we learned about in VIP. Okay, so this is a very important lesson I want you to grasp, because this will really help you identify setups, okay, especially reversal patterns, okay? You don't need to know that this is a market maker sell model, okay? You can still use these setups and trade in either direction, buy or sell, okay? So we've gone through the buy side of the curve and how you could have traded this long based on just using those bullish order blocks, okay? And understanding the way that the market has now shifted direction by now starting to make higher highs, taking out swing highs, okay, which it didn't previously. As it was going down, it was making lower lows and lower highs, okay. So now, as I said, this is important, okay. On the way up, you can see down candles are supporting price. That's what bullish order flow is. That's what bullish order blocks are, okay. So here we go up. That down candle is a bullish order block. We come down. What should we see? We should see another higher high. We don't get that, okay, and we don't have to guess that we're not going to get that. I'm going to show you exactly how you know you didn't get that and what could be your entry to go short and target each one of these swing lows, okay, or just the low of the session at that point in time, okay. So let's have a look at that. Let's clean this up a little bit. So firstly, let's understand, how do we know that this bullish signature has failed, right? And there's a couple of things going on here, right? Remember, on the left-hand side, we're coming into a premium PDRA, and right at 9 a.m., right? That's 9 a.m. So brand new hour, coming into a premium PDRA, okay? And so we need to be thinking, okay, maybe we're now having a reversal or a pullback, right? They're things that you need to always consider. So what do we see here? We see that this is a down candle that's made a new high, okay? So that is also a bullish order block, right, that we're coming into. But when we go through, we're now below. This has closed below that down candle. That bullish order block has failed, right? That bullish order block has failed, because look at what we have at all the previous bullish order blocks, okay? Down into that bullish order block, move up, okay? Down into that set of bullish order block, two down candles, move up. That's what we should be expecting here as well, but we don't see that. So that bullish order block, as soon as we get this candle close below that down candle, that bullish order block has failed. Then you've got to read the market. Well, what is that? Okay, because that in itself is a bearish signature, right? That is a bearish signature, okay, once this down candle closes below that down candle. Very important, okay? That down candle, okay, let me make this a little bit bigger so we can see this. I can draw some markings, okay? Let me take off the sessions. You know that we're in New York session, Friday the 8th of November, 2024, okay? So this down candle is now our bearish breaker, because that down candle preceded this move up, which is a higher, right? It's a higher swing, okay? So when we are down below that, we've closed below that, you can see clearly closed below that down candle, right? And closed below, or traded below the open of these two up candles, okay? These two up candles, this one and this one, is our bearish order block. So we have a bearish breaker and bearish order block, okay? Inside of that, that's our bearish signature. That's validated when we closed on this down candle here. So any push up on the next candle, any push up into that down candle, which is a bearish breaker, or these two up candles, our bearish order block, is a entry trigger to go short and expect repricing lower. Okay, now ICT says for the bearish order block, as soon as price trades below the open, okay, he doesn't care if it closes below or not. Okay, it's a personal preference. So here, this candle, you can see, it was also below the low of that bearish order block. Any push up block in these two candles, okay, is an entry to go short because it's coming into that bearish signature. Okay, very powerful strategy, but don't forget the context behind it. Okay, at the top here, we're coming into a premium PD array, right? Which is that 15-minute sell-side imbalance on a day where we've been going down all day. That makes this higher probability. Okay, so I'm going back to the 15 minutes to show you, right? So you don't forget what we've seen up there. Okay, this move up, right, on a 15-minute chart, that's the candle that we are looking to short, okay, from this sell-side imbalance, okay? And if I turn on the sessions, you will see that is the Asia. So all day we've just been going down, right? So we're going down. This could be just a little pullback to go lower, okay? So that's the context that we've got, which helps us in identifying that setup as high probability because we're coming into a premium PD array, okay? So that's important, right? All of that gives you added confidence, more confidence, higher probability, okay? So jumping back to that 5-minute time frame, okay, repeating what we have here, okay? It's all about identifying that the bullish order flow, that bullish ICT signature has now failed, right? If it's failed, then do we have a bearish ICT signature? And we do. We have a down candle preceding the two up candle, which is a higher swing, okay, making that down candle bearish breaker. These two up candles, bearish order block. Once we trade below the down candle, we have therefore invalidated that to be a bullish order block. It is therefore now a bearish signature. Any push up into, well, this is the down close candle. After that, any push up into that down candle or these two up candles, okay, is a entry to go short, okay? Target is up to you, right? Any of these, this is all low resistance liquidity, right? Because each one of these swings let me rephrase that. Each one of these swings, okay, is higher. So anyone long from here at that point in time hasn't been stopped, okay? None of these folks have been stopped. None of these folks have been stopped. And as the market's been moving up, under there resides sell side liquidity, low resistance, okay? Target should be low of New York, okay? Regardless of that being a market maker sell model, you have ICT signatures to trade that up with the bullish order box that I've shown you and to trade that down with the bearish ICT signature that I've shown you with context on the left here to short as the market's coming up into a premium PD array. And then, very important, seeing that the bullish ICT signature is failing. Those two things, right, is what gives you the confidence to enter, okay? So let me just make sure you really understand that, okay? Because that's important. Market's moving up into a premium PD array on the left-hand side. Then the market is failing, right? Bullish ICT signatures are failing with this candle right there, okay? Because that's closed below the bullish order block. Then you identify, what do I have? What can I use to identify a bearish signature? We have your bearish breaker, your bearish order block. These candles are pushing up into that bearish signature, allowing you to expect repricing lower. Time is important, okay? Very important. What time is this? Brand new hour. 9 a.m. coming up into that premium PD array, okay? What time is this? Where you've got the failure of the bullish signature, therefore making this a bearish signature, 9:30 a.m. You see that? 9:30 a.m. is an important time that I've mentioned many times on this channel, where you should be looking for setups. Here we have a bearish ICT setup to go short and expect repricing lower. It can't get easier than that, folks. This is what we're learning about in VIP. We're learning how to identify these setups, but we're taking it to the next level. We're learning how to get sniper entries. Okay, we have had an amazing week in VIP again, right? I don't know any other group that's able to pull out 50, 60, 70, 100 pip days in this market, okay? Again, I invite you to join VIP. The link is in the description below this video. I hope to see you in VIP. Hope the video is useful. I will now talk with you in a future video.